Hey, good afternoon. Welcome to week 3 of our $50,000 challenge of the Perfactor rating. We are currently finishing up right now of all of what you're looking at here is literally the algorithm running and doing all of its math. And it kind of takes a while because there's a lot of data that goes into it, and it's 50,000, and there's 505 stocks in the S&P 500. So it kind of takes a while. So once this is done, it'll be updated. In the meantime, for those, this week is going to be a little bit short because I am literally on my way out to go for the weekend up to the Boundary Waters for a canoe trip. My buddies are picking me up at 4, which is in half an hour, so I'm going to be busting through this pretty quick. So what is the challenge? Basically, we're allocating $50,000 over the course of 10 weeks to prove and improve this algorithm that I invented, which you can read about at perfactor.net. It's not live yet because I have to figure out the legal challenges of making it available to people because of the whole SEC and rules and all of that, but it's alright. So we're on week 3. Basically what's happening is every week I'm buying $5,000 worth of stock. I pick 5 stocks that are recommended by this Perfactor algorithm, and then I buy each one to get as close to $1,000 of it as possible. It won't be perfect because the prices don't quite go into $1,000 perfectly. So what's the goal? The goal is to make a bunch of money and then also to improve this algorithm so that it gets better over time. I do have a disclaimer that I need to read because this is stocks and money and there's a bunch of legal challenges with this. So just hold on a second while I do my my legal duty. So nothing contained within this program should be considered a stock recommendation. The purpose of this program is to analyze the effectiveness of a proprietary investment algorithm, not to recommend any stocks for purchase. Investors should be cautious about any and all information provided during this program and should consider the source of any advice on stock selection. Various factors may influence or factor into a stock analysis or opinion. All advisors are advised to conduct their own independent research into individual stocks before making a purchase decision. In addition, investors are advised that past stock performance is not indicative of future price action. You should be aware of the risks involved in stock investing, and you use the materials contained herein at your own risk. No guarantees made about the accuracy or validity of any information presented during this program, and no responsibility will be taken for any errors or omissions which may have occurred. The analysis, ratings, and/or other information presented during this program do not provide, imply, or otherwise constitute a guarantee of performance. So basically I've got this mental model of the stock market. I'm trying to beat it, but all models are wrong, but some of them can be useful. So with that said, don't buy anything that I recommend today because I'm not making any recommendations. We're just do with it what you will, I guess, is what I'm trying to say. Hello T&H1, hello Maggie7926, thanks for joining us. You can watch me live. We do this every week. Usually it's on Thursdays, but I'm going out of town this week, and we're doing it Wednesday at twitch.tv/dirjk for those that are listening on the podcast. We also upload it to YouTube, and then you can follow us on Twitter at dirjk_show, where we also tweet out some various weekly financial picks and all of that other stuff. So, while this is doing all the new calculations and rating everything and figuring everything out, let us look at last week's picks. Let me see here. Actually, let me check my microphone because week 1 I had some microphone problems. I want to make sure you guys can actually hear me. Picks. Let me see here. Yeah, it sounds like it's going pretty good. Alright, so Snoop Dogg. I was listening to Spotify earlier. So week 1, which was 2 weeks ago, we made 5 stock purchases. ALK, NWL, LUK, CTL, and RRC. We purchased roughly $1,000 of each one of them on September 15th. So what happened is we made the decisions on Thursday evening, and then the next morning, roughly whenever I woke up, it was like 9 or 10 or something Central Time, I just bought as many shares as I could to keep the price under $1,000. Kept track of their price target, and then for a total cost basis of roughly $4,900. Now you'll notice I'm also tracking what the S&P 500 closed at on that Thursday, which is the day that we made the decision, and that's because that's the purpose of this algorithm. The purpose of this algorithm is not to make as much money as possible. The purpose is to beat the market consistently over time. The point is to make money, but that's the challenge. So overall, we're doing pretty good for our week 1 purchases. It should be noted that this is the original formula, the original per factor algorithm. We have made some changes as we've been watching over the last 3 weeks to make it better. So Alaska Airlines is down 1.52%. It's not terrible, it's not good. NWL is down 3.84%, which is better than it was last week. We were down like 5%. We've made 9%, 9.96. It actually crossed 10% today when I was watching it earlier on LUK. It's pretty good. It's pretty good for 2 weeks, I think. CTL, which is CenturyLink, which is our number 1 pick week 1 because of its 11% dividend, is at 1.79%. Not a huge return, but it's doing pretty good. And then again, RRC, which we picked week 1 because it was the highest potential return, is at 9.78%, which is, I mean, those are just ridiculous returns for a 2-week percentage. So for those who are joining us for the first time today, the whole point of this algorithm is to buy and then hold for 6 months to a year. So the theory is that I can't beat all of the investment companies, the New York stockbroking companies, the banks that have millions and millions of dollars to put into. They pay PhD students. They pay super geniuses, and then they have super computers. I mean, I am literally working in my office. Let me show you at my house. With, I mean, I got 3 monitors going, but like, that's literally it. So I can't compete on the same time frame as them. Like, they're doing 100 trades in half a millisecond, and I mean, I have shitty internet in Minnesota. So my goal is to identify stocks, purchase them, hold them for 6 months to a year or longer, and then make the highest, beat the market on that return. So with that said, we've made 3.21% in aggregate in week 1 compared to the stock market on the same time period of 0.46% returns. So that's pretty good. Week 2, we adjusted the algorithm to take into effect the PE ratio of the various stocks. And then also because of that, we also adjusted the weights of how the actual math is conducted and how it ranks the stocks. So it's slightly different. We also identified some issues for or areas of improvement for the algorithm, but those have not yet been implemented because I've been super busy with getting all my work done in order to go out of town today. So let's look at this. NAVI we bought last Thursday, so it hasn't even been a week yet. It's been Friday, Monday, Tuesday, now Wednesday, so it's been 4 trading days. Is up 9.37%. Pretty good. Alaska Airlines, it was also recommended, so we bought it twice. It's up 1.52%. So overall, it's almost literally even between week 1 and week 2, which is kind of interesting. GT, a Goodyear Tire, we are up 2.67%. DFS, which I think it's Discover, but I couldn't tell you off the top of my head, is up 5.74%. And then DVN, which is, I don't even know, is up 4.36%. So that's an aggregate return over the last 4 market days of 4.71 compared to the market, which is 0.26%. So overall, we're doing pretty good, I would say. So now we're on week 3. We know how week 1 and week 2 did. So now let's look at week 3. So we're going to go through the stocks. If I can get it to show up here. We want the desktop. This is done. We're going to decide on 5 stocks to purchase tomorrow. And the exact price purchase doesn't matter. My theory is I'm just going to buy it when I wake up and get it done. So the way that this algorithm works is it only looks at stocks in the S&P 500. The theory behind that is because they're large cap stocks with a high amount of volume, basically the theory is to reduce risk. So we're not looking at risky stocks like penny stocks. We're not looking at small cap or even mid cap stocks. Only the S&P 500, which is why we're comparing it over time to the S&P 500. So the overall theory is basically don't invest in shitty companies and you'll do better than the market. Only invest in good companies. TNH. So did you buy more shares of ALK in week 2? I did. So we may actually buy more this week. Basically, every week is to prove the algorithm. I'm buying $5,000 worth of stock, so 5 stocks. If it's the same stocks as previous weeks, that's fine. But we're going to, as you can see with this spreadsheet, we're going to track it on a week-to-week basis. So if you continue to follow the podcast, basically consider each week its own individual portfolio, if that makes sense. So, number one stock pick, and again, don't buy anything that I'm not making stock recommendations here. This is literally just the algorithm, and then I'm trying to prove it. So I don't know if these are going to go up. I don't know if these estimated returns are correct. I'm not making any promises. So, disclaimer read. All right, CTL, which is CenturyLink. So the way that this algorithm works is it basically takes in a bunch of inputs. It looks at the price over earnings ratio. It looks at the dividend percentage. It looks at its closing price and then its price target. So the price target is an analyst price target, but there's a bunch of math that goes into coming up with this specific number. So it is our own. It's got a bunch of inputs, but it's our own generated number or whatever. The estimated return is literally just closing price or price target divided by closing price or whatever. And then the Perfactor rating here is on a scale from -1 to +1, where -1 is equal to basically sell this right away, very strong sell. Positive 1.0 is equal to very strong buy this absolutely, and then 0 is hold, like it's neither buy nor sell. And this is also a proprietary rating, but it's basically just an average of other analyst ratings from a whole bunch of different sources. So the reason, looking up here in the top left, the number 1 stock, basically the only reason that CenturyLink is on this list and it's the number 1 list is because if you purchased it right now and then they continue their dividends as they've been continuing them, paying them, you're going to make 11% in a year, that's a pretty good return. So it's factored into that. The estimated return percent is 33.82%. I don't know. Then looking up, so this dimensional analysis up in the upper left, you can see that the PE ratio is not very good because it's not getting a lot of points from there, so it's only 27. That's not a good PE ratio, really. Dividend is huge. The estimated return percent that's a lot, 33.82. And then the rating it's a solid buy, but it's not a great buy. The price has jumped, or it's kind of moved. It's not really. So I'm not too excited about CenturyLink. I'd prefer not to buy it this week, but I don't know. AGN. Let's look at the second pick. AGN has dropped. So it looks like the reason that this one is so highly ranked is mostly because of its PE ratio. 6.35 is low. It's one of the lowest ones in the S&P 500, I think. So it means it's probably undervalued. It looks like it's paying a 1.3% dividend, which is pretty good. Its price target is 270, which implies a basically 30% return. It looks like that has dropped recently, which means that some analyst somewhere has lowered their price target for this. And then its buy rating is very solid at a 0.55. That's like very good. But that looks like that has also dropped. The price has dropped from 220 last week to 208, which is almost a 10% drop. That's huge. It looks like it popped back up to 209 or 211 on Monday, from Friday to Monday. Now it's at 209.45 and 208. So let's look at it at finance. I highly recommend finance.yahoo.com because they got a lot of really good viewers there, information. Let's look at its 6 month. It's pretty. What am I looking for here? 50-day moving average is lower than its 200-day moving average, so I don't know. The next thing I want to add to this algorithm is actually momentum and see if it's going up or it's going down, but I haven't quite figured out how to do that. Oh, what did I do with my pencil? So I'm going to add AGN to the short list for purchased for tomorrow, because that upside is really good at 30% and the rating is really good, and I just feel I don't think it's going to drop too much more, so we'll add AGN to the ratio. MHK is new. This was not here yesterday. Well, that is a huge jump. So it jumped from rank 129 yesterday to rank 3 today. That is, and its PE ratio dropped a significant amount to 4.91. That actually makes me think that maybe I've got some bad data. So let's look at it. Let's look at Yahoo for that. Mohawk Industries. I've never even heard of Mohawk Industries. I don't even know what they do. Did they just announce or something? So PE ratio is 4.91. That is stupid low. That's the lowest I've ever seen. Earnings per share is 49.9. That's good. It's not paying a dividend. What the heck? So okay, so maybe, so I did just change the data source for all of the prices, daily prices, and then the earnings per share / PE ratio, because I noticed that the one I was using last week, there's some errors in it. So it could be just that this is actually accurate, and then before, wait, I'm on the wrong page. Before, this old data was not accurate. So it doesn't pay a dividend. It's at a 4.91 rating. 57% buy rating is solid. 12% return is pretty, I mean, it's not great. I don't know. MHK. It looks like a strong buy in Yahoo, then 278. Yeah, we'll add it. We'll add it. It's third on the list. We'll add it to the short list. MHK. Next one is NAVI, which I already own. I bought last week, and it's already up 10% from last week. So, again, this is solid because it looks like it's number 3 because of its, oh, this is the wrong one, Navi. PE ratio is very low at 8. The rating, that's 0.5. That's a solid buy rating. The dividend is 4.55%. That's pretty good for 12 months to a year. And an estimated return of 11 to 12 is not great for holding it for a year. But it's really not terrible. Looking at this blue line, which is the daily price over the last, looks like since the 16th, so roughly the last 10 days, including weekends, just because I haven't filtered those out yet. It looks like it is on a slight, on an uptrend basically. It's been, the rank has been very solid over the last 10, so it's very much considered a good buy. So I think I'll add that to the short list as well in order to look at purchasing more of NAVI. MHK, commercial and residential flooring. Okay. I've still never, let's look at their profile. Home furnishings and fixings, Mohawk Industry. So, very good investment advice is to understand the company that you're investing in. However, remember, I'm trying to evaluate the performance of an algorithm, and I'm not making stock recommendations. So, even though I have no idea what Mohawk Industries is, and it's a really stupid idea to invest in a company that you don't know what it is, I'm adding it to the short list because the algorithm is recommending it, if that makes sense. So, make sure you do your research if you do invest in it. So MHK I've added to the list. NAVI I think we added to the list. GT 5th. 12% return. I also invested in GT because of this algorithm last week. I bought 30 shares. It was purchased at 32.42. Now it's at 33.29, which is a jump of roughly 2.5%, which is pretty good. So this one's ranked so high because of its low PE ratio, 7.25. It pays an okay dividend, 1.25. It's still got a roughly 13% return, and then that buy rating of 0.6 is very solid. It also looks like, based on the price, it's on an uptrend. However, looking at the daily rankings, this red line, it looks like it's 10 days ago is roughly the third best buy according to this algorithm. Then it dropped down to the 8th, and now it looks like it's dropping again, which might mean that well, it's flattened out over the last 3 days. It's been at rank 5 for 3 days, all week. Let's see, I bought 30 shares last week and I've made 2.5%. I mean, there's still a huge potential for upside, so we'll add that to the short list as well. And move on. ALK, Alaska Airlines. Now, Alaska Airlines, I bought the first week, and I've lost 1.5% on it, which is not a lot. But I also bought it week 2, and I've gained 1.5%, so it's roughly even. I'm not sure I want to add it to the short list just because I've got it 3 weeks in a row. I don't want to do it 3 weeks in a row. So the algorithm is recommending it, but I'm not sure that oh man, a 0.7 buy rating, that is huge. 32% upside. PE ratio is 12. I mean, maybe it just hasn't broken out yet. Maybe, I don't know. It's hard to tell. Oh, sorry. So Maggie7926 asks, so exciting, will you put a bid order in or just buy it whatever the price is at opening tomorrow? So I won't do it right at opening. So my plan is we're driving up to Ely tonight. We're staying in a motel with Wi-Fi, and then basically, maybe it will be right away in the morning. But basically, as soon as I wake up, put it in the bid, and it's just going to be whatever the market price is. So if it's down, if it's up, and the point of that is basically to try. I don't want to worry about just like the differences of 0.5%, or like 5-minute difference between this price and that price, because the time frame for this is 6 months to a year. So what's the difference between buying it at 9 at open or at midnight or noon or whatever? So that's because of the algorithm. If I was doing real investing for something like personal use, I would probably watch it and try to get it on a low thing. Maybe wait a day or 2 or 3 or whatever. But I'm trying to get it, because it's also a time thing, basically just buy it tomorrow. Yeah. So ALK, I'll add it to the short list, but I'm going to put a question mark next to it because I don't necessarily want it 3 weeks in a row. Even though the 32% upside is way better than the 12% upside, but that's alright. So let's look at Foot Locker here. Foot Locker, 8 PE ratio, just giving it 7 points, which is where the majority of its I guess its low ranking is coming from. It's got a 0.25 rating, which is good. Estimated return at 32% is good. It's real good. The dividend is 3.5. I mean, yeah. The price looks like it trended down, but it's on an uptrend this week. It's kind of come back up. So Monday it was 34, now 35 and 35. So yeah, I'm gonna do Foot Locker. I like Foot Locker. I think it's Foot Locker. Is that Foot Locker? Yes, FL is Foot Locker. Okay. Since I'm here, if it loads, 50-day moving average is 38, and the 200-day moving average is 56. That is trending down. I think. I'm not really sure about simple moving average trends. I was reading about it earlier this week, but I haven't really thought about it all that much. So anyways, I'll add to the short list. 1, 2, 3, 4, 5. We've got 5 on the short list. Footlogger's 7. Let's go through VIB, MO, and NWL really quick, because my buddies are coming to pick me up here in about 6 minutes. Love Feelings asks, what algo do you use? Your own? Yes. So this is a proprietary algorithm. You can read more about it at perfactor.net. It's not live yet. I mean, it's live. I'm using it. It's not available to the public yet because I need to figure out how to make it live legally, because there's a lot of regulations with financial stuff. And I want it to work and prove that it works before I pay for a lawyer. So, yeah. Hey guys, this isn't how you make money in 2017 if you're a programmer. You're right. You make money as a programmer by starting your own programming company and making stuff for other people. So check out Creative Ape Studios, which is my company that I run. You can also check out YourHiredNow.com, which I'm the chief technical officer of. And then there's a whole bunch of other stuff that I do too. So this is really just a side project that I'm doing that I want to make money off of. So VIAB, I have no idea what company this is. Solid PE ratio, dividends 2%, almost 3, 40% potential upside, but that buy rating is only 0.17. I mean, it's not bad, but it's not really good. It's a buy. It's just not a strong buy. It's like a weak buy. It is supposedly the 8th best value in the market today. You know, I actually like this. I like VIAB. I'm gonna, man, where'd it go? It's good, I think. Frankie Tank 9, CTO of a website that looks like it's made in 1999. Did not teach you backend. Oh, well, Frankie, you can, I mean, sure. I don't really care what you think because you're not the one paying for it. Let's see. So VIAB. I like the estimated return. I really don't like the Perfactor rating. I do like the PE ratio. Dividends, okay. Maybe. We'll put that on a maybe. And then MO, just to try to round out the top 10, just to look at them at all. 8.25. PE ratio is good. Dividend is solid at 4.2. 9% return, not that good. It looks like it's already moved up a lot in the last 10 days or so. And then the rating is good. 0.3 is a good rating. So I'm not interested in MO. Not interested. NWL. 16 PE ratio, which is actually really good compared to the market, the overall average, but it's not good to be in the top 10, which means there must be something else good about it. The dividend is okay. Price target's 55. Estimated return at 33% is good over the next 6 months to a year. And then 0.61, that's a very strong buy rating. Let's see the prices. Haven't really moved all that much. I know the blue line makes it look like it's dropping a lot, but that's because it auto scales to make everything fit. 40 looks like its high in the last 10 days is 43.2, and now it's at 41. So it's, I mean, it basically hasn't moved, which could mean that it's potential to break out. It could also mean that it's it could go down. So whatever. So NWL is a maybe. Sweet. So that's the top 10. So we've got AGN, MHK, NAVI, GT, FL, VIB, and NWL on the short list. 1, 2, 3, 4, 5, 6, 7, 8. So that's 8 out of 10. I need to get rid of 3. The only reason I didn't look at CTL is because I've already got it twice in a row. Or I've already purchased it the first week. ALK, I've had 2 weeks in a row, so I've eliminated that one. I'm not going to do NAVI just because I bought it last week already. So 1, 2, 3, 4, 5, 6. Okay. Not going to do NAVI. MHK. I'm not going to do MHK because it doesn't pay a dividend. Even though it's got a really low PE ratio. And a really solid buy rating at 0.6. 1, 2, 3, 4, 5. 1, 2, 3, 4. Yeah, so that leaves me with 5. So, it is official. Tomorrow, whenever I wake up, I'm going to be purchasing AGN, GT, FL, VIAB, and NWL. Now again, reminder, this is not a recommendation for you to purchase this. This is to evaluate the effectiveness of this algorithm, which so far is doing pretty good. It's picked out some winners, it picked out some losers, so yeah. I think it's getting pretty close to my buddies. It's 4 o'clock, so it's about a half hour of the podcast. That's all the time that we got. Thank you everyone for watching, and thanks. Shout out to all the trolls. you make this worthwhile. And then yeah, we'll check back next week, and have a good weekend, everyone.